Assalamualaikum and hello everyone. For today's video, I'll be talking about withholding tax. Now I'll be proceed with the general information about withholding tax. What is withholding tax? It is a mechanism to collect taxes from non-resident who has business dealings in Malaysia. It applicable when non-resident renders service to resident. That non-resident does not have a business or physical presence in Malaysia but only renders service from his home country. Tax is imposed on the non-resident person and it will be remitted to IRB within 1 month upon paying or crediting the payments to non-residents. However, the payer is responsible to remit the tax to ensure an efficient tax collection. So what are the scope of payments subject to withholding tax? It consists of 5. All of these payments will be explained further later. So how withholding tax works? It occurs when payer, which is resident in Malaysia, paid sum of net payment under the scope mentioned earlier to the non-residents, which is payee USA. Payer then will be appointed as an agent to be responsible to collect income taxes from such non-residents, to withhold a portion of the payment and pay to the tax authorities. Such portion of payment is known as withholding tax. So what are the types of withholding tax? Every income will subject to different rates as stated here. Only for the contract payments, withholding tax is not a final tax. Non-residents contractor need to submit tax computation to IRB in ascertaining its chargeable income. With the existence of double taxation agreement DTA, the rate of withholding tax will be different. So, withholding tax will be reduced if a lower rate is specified in the various DTA conducted by Malaysia. DTA will replace the rate mentioned earlier. So, for example, let's say Malaysia has a DTA with Germany, Qatar, and Singapore. The original rates of royalty will be 10%. It will be reduced to 7, 8, and also 8% in respective countries due to the agreements made by both parties. It also same goes with another income stated here. So what are the factors for a person liable for withholding tax? It must be a non-resident, the income must be in one of the mentioned category, income must be derived from Malaysia, income is not attributable to a business carried by the non-resident, the income is not exempted by Schedule 6, and also DTA between Malaysia and non-resident home country. So, determination of final tax. How we want to determine whether it is a final tax or not. For final tax, no filing of returns, example fees under section 09 and also 109B. Also, no further assessment or tax payable. For not final tax, submission of return by non-resident, example fees under section 107A, tax withheld, offset, or cancelled against final taxability. Any excess will be refunded and any additional tax to be paid to IRB if it is not enough.
Moving on, one of the scope of withholding tax includes interest and royalty, which is governed under Section 109. Withholding tax will be applicable for taxation of non-residents on interest and royalty based on 3 factors, which are interest is paid or credited to non-residents, income is derived from Malaysia, and the income is not exempted from tax. First of all, interest income is often described as a compensation for delayed payment in reference to time for the use of money. Reasons of borrowing is the deciding factors to establish interest income deemed derived from Malaysia. The borrowing must be used in production of Malaysia-derived income. Borrowing is used to purchase assets held or used for the production of Malaysian-derived income, and borrowing is secured by assets located in Malaysia. And for interest income, the rate applicable would be 15% on the gross amount. Look at some example. A France resident company, Bonjour Limited, gives a loan to My Sdn Bhd. In 2015, My Sdn Bhd pays interest of 350,000. Would this be applicable to withholding tax? The answer is yes, it is deemed derived from Malaysia. 15% of withholding tax would be applicable, which is 52,500. Next, withholding tax on royalty. Royalty is defined under Section 2 as any sums paid as consideration for the use of or the right to use copyright, artistic or scientific work, patents and other means of reproduction that are used to reproduce in Malaysia, or the know-how or information concerning technical, industrial experience or skill. Also, income derived from alienation of any property, know-how or information mentioned in this paragraph. And the rate for royalty will be 10% on the gross amount. For the withholding tax on interest and royalty, there are a few exemptions. Firstly, for interest, approved loan, which is loan made to the government by a non-resident person, will be exempted. Next, interest paid by licensed bank or financial institution to non-residents. In addition, interest on securities and bonds, unit trust and listed closed-end fund. Also, the interest from borrowing from financial institution in Labuan Offshore Bank. You can read more on this on page 428 of the Malaysian Taxation Textbook. For the royalty, exemption will be given for royalties that are approved by the Minister of Finance under Section 127. Also, in most double taxation agreements, such as Malaysia and Australia, approved industrial royalties shall also be exempted from tax. Moving on, public entertainer will also be chargeable under Section 109A. Public entertainer is defined as a compere, model, circus performer, lecturer, speaker, sportsperson, an artist, or individual exercising any profession, vocation, or employment of a similar nature, or an individual who uses his intellectual, artistic, musical, and others in carrying out any activity in connection with any purpose through live, print, electronic, and others that are mentioned in this paragraph. Remuneration of the non-resident is chargeable to tax under Section 4A or Section 4B. Remuneration of non-resident entertainer will be in respect of the service performed or rendered in Malaysia. The rate of withholding tax will be 15% on the gross amount. This must be paid to the authorities within 1 month after crediting such remuneration to the resident. This represents a final tax liability on the entertainer. And please be reminded, unless the public entertainer visit to Malaysia is supported by public funds of the government of a country outside Malaysia, the 60 days exemption rules does not apply.
Next is special classes of income. This section is under section 109B. Firstly, we will look at section 4A, special classes of income. This section consists of three parts of income, which is section 4A1, section 4A2, and section 4A3. We will look further explanation. Firstly, under section 4A1, amounts paid in consideration of services rendered by the person or his employee in connection with right to use of property or right belonging to the non-resident, the installation of operation of any plant machinery, or other apparatus purchased from the non-resident person. Next, section 4A2 about amounts paid in consideration of any advice or assistance or services rendered in connection with technical management or administration of any scientific, industrial, or commercial undertaking, venture, project, or scheme. For example, management fees, survey fees, or and agency fees. Section 4A3 is about limited to lease rental for the use of movable property. For example, oil rigs, boats, ships, motor vehicle, aircraft, or other plant and machinery. The mode of renting includes slot hire of particular section. For example, hire of vessels, hire of life raft. Freight charges are not within section 4A3 as is free for shipment of goods and not payment for the use of movable property. Next, we look at the derivation of income under section 15A. Special classes of income shall be deemed to be derived from Malaysia if responsible for payment of section 4A lies with the government or state government. Responsible for payment of section 4A lies with a person for that basis here, or the section 4A charge payment is charged as an outgoing or expense in the account of a business carried on in Malaysia. And for section A1 and 4A2, services must be performed in Malaysia. Then we will look at the next derivation of income, which is under section 15B. Gross income in respect of gain or profit to which section 4F applies shall be deemed to be derived in Malaysia if responsibility for the payment of such good or profit lies with the government or state government. Responsibility for the payment of such goods or profit lies with a person who is resident for that basis year if the payment of such goods or profit is charged as outgoing or expense in the account of a business carried on in Malaysia. Next is about contract payment. Contract payment is under section 107A. Contract payment means contract payment to non-resident contractor. This contract payment is applicable for services under a contract. Only the service portion of the contract will be subject to withholding tax. this including any work or professional services rendered in Malaysia in relation to an undertaking project or scheme in Malaysia, then non-resident contractor has a business presence or permanent establishment in Malaysia. Next, withholding tax on contract payment can be divided into two, which is under Section 107A and Section 109B. If the non-resident performing the services with permanent establishment, it will cover under Section 107A trading in Malaysia. But if the non-resident performing the services without permanent establishment, this will cover under Section 109B trading with Malaysia. Further definition, this contract payment will be include partnership, advisory, consultancy, technical, industrial, commercial, and scientific services, or include oil exploration and exploitation activities over territorial water of Malaysia. But a payment would not be contract payment if it is fall under right to use, which is royalty, and also under employment
Permanent
contract.
establishment. What is permanent establishment? It is a fixed place of business and the business is wholly or partly carried on. It is include a quarry, a farm or plantation, a factory, and so on. The following do not constitute as permanent establishment. First is using facilities for the purpose of storage or display. Second, maintenance of stock or merchandise belonging to the enterprise for the purpose of storage or display and for the purpose of processing by another enterprise. Third, maintenance of a fixed place solely for the purpose of purchasing goods and collecting information for enterprise and for the purpose of supply of information, scientific research, and similar activities for enterprise. Factors that need to be considered to determine the PE status. First is whether contracts are concluded in Malaysia, stock are maintained in Malaysia, the title to the goods passed from the seller to the buyer in Malaysia, proceeds of sale are received in Malaysia, and last, services are rendered in Malaysia. Agency clause. If foreign enterprise use independent agent in Singapore to market their product in Malaysia, there will be no PE exist. Hence, no tax will be imposed on profit made. However, if the foreign enterprise appoint agent in the host country, Malaysia, there will be PE exist. Hence, tax will be imposed on profit made. Penalty. Penalty will be applicable to all the withholding tax non-compliance. Penalty for withholding tax non-compliance. It is 10% penalty on the balance amount of withholding tax payable. Resident payer will also be penalized for incorrect return, which is 100% of the tax undercharged. Example of non-compliance. The payer failed to pay withholding tax at the prescribed rate. The payer pay withholding tax late, which is not within the period of 1 month. The payer failed to pay increase in tax imposed on him for late payment, and insufficient withholding tax deducted. Thank you.